All right, what is up, traders? Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. We're going to be taking a look at Bitcoin. Excuse me. We're going to be taking a look at Bitcoin and a few other assets around the marketplace today to try to get a feel of the market, if you will. Currently, right now, just by pulling up the quotes, you can see the big three indices: US 30, US 100, Dow Jones, the NASDAQ, S&P 500, all down, with the NASDAQ leading the way at 0.96%, almost a full percent down on the day. But on a day where we have absolute sideways and complete total chop on the dollar. Nevertheless, the dollar is up on the day 0.17%. So we're trying to get an idea as to what we're looking for here. Currently, you do have some things going on with China and Russia. That's being spoke about more than economical stuff that could potentially cause the markets to suffer a little bit of a downslide here today. But at the same time, we go on technicals. Currently on Bitcoin, what we have done on today's entire range is we took out last week's low with this wick here at the London session open, took out last week's high, and then had a negative reaction. You can see that the point of control is setting down around the low part of the day. So basically what that indicates is if you have difficulty getting back above the daily open, then naturally the bears are going to look to jump all over that as a shorting opportunity. Your DXY index is currently pulled back into last week's close. So if I pull up the weekly chart on that, you can see right here, that's last week's close, closed up on the week. Kind of sort of an engulfing. I mean, you did take out the prior week's low and the prior week's high, closed above the previous week's open. So, I mean, it is an engulfing outside weak candle to the upside. And so far this morning, or so far on the open on this week, you've literally tested that, and that is where you are currently finding support. And that just happens to be right above your yearly opening range. So last 3 weeks, we've literally been chopping sideways within a very small range comparative to where the yearly open is. So basically what this looks like to me is you have a whole lot of either accumulation going on at this level for the dollar or distribution. Naturally, we are on the bearish side of the dollar still, so we want this to be distribution, and we would love to see the dollar fall back under its yearly opening range, as I do believe that would start the downside trend on the dollar back and finish off Q1 with a lower DXY, down near the lows perhaps, but lower nonetheless. And a lower DXY would be good for risk on assets, as we are still currently slightly correlated inversely. That we could lose that correlation, but we can look at other markets to see if money is flowing in and out of it. Here is your VIX. I'll pull up the daily and I'll pull up the line chart. This way you can clearly see that the bottom has formed on the VIX, and you are starting to see an expansion move away from the lows, coming into an area of potential resistance at 22.82. So basically this would be a good spot for risk to find support. All right, because you've gotten up off of the lows with the VIX. A lot of people are going to look at that as being bearish. And, the technicals are very suggestive that what we have seen is nothing more than a bear market rally, except for on Bitcoin. What we've seen occur on Bitcoin is something a lot more than just a bear market rally. And I think the same goes for the S&P 500. Your Dow Jones Industrial is the one that is structured bullishly according to just looking at moving averages on a daily closing basis. If we pull this up, get all of your major moving averages up there, meaning the 20, the 50, the 100, and the 200, you can see that price is now trading under the 50. But anything above 33,336 is considered, and still, in my opinion, would be considered bullish. You would need these moving averages to completely break back down in order to make this asset look bearish again. I see a lot of sideways consolidation. The fact that you are consolidating up here instead of just seeing, down day after down day after down day, that is more suggestive of consolidation than it is a bear market rally. All right. So while we're structured bullish, still we are looking for support. Now, last hour on Bitcoin, we did close below a key area of support that we were watching, but it wasn't a massive breakdown. But nonetheless, it was still a breakdown. And as of right now, it looks like it's trying to regain that support. So, I mean, as far as a day trade is concerned, I would be looking to position myself bullish in anticipation of a breakout. And that's simply because you are making higher lows. Now, this is a pattern that people call an ascending wedge. And typically, your pattern traders are looking for ascending wedges to break down to the bearish side. You can see that this pattern still has a lot of time left on it in order to play out if you go by the lows. If we get rid of this indicator, which is just the volume profile, and we use a line chart instead, then you have something different. And get this up here like this and put this like that. So currently on the line chart, that's what you got going on. So a breakdown from this area will look bearish. The fact that you took out last week's low today, if you get the breakdown today, then I would expect probably a little bit of a pullback in the next few days on Bitcoin. If this area holds that support today and we get a breakout today, then I would look for that continuation to continue on up into at least the next area of resistance, which would probably be around the $27,000-$28,000 region. But like I said, everything is structured bearish already on the day, with the dollar struggling, but nonetheless, it is still bullish. We have the open coming up here in 7 minutes. 7 minutes on the dollar. So we have time. We don't have to rush into a position just yet. We can simply wait. That is the luxury of trading. And the best part about it is, if we don't get the setup we want, we do not force a trade, as forcing trades is the best way to lose money in this industry. All right? That's where we stand. How is everybody doing today? I haven't even looked to see if anybody's here or if I'm talking or if there's any screens up. Make sure all the mics and everything are good to go. Looks like I am up. I am live. and everything looks good. Beautiful. How is everybody on this wonderful Tuesday morning? It is the first day of the market. Yesterday we had, or the first day of the stock market trading. Yesterday we had President's Day, so there was no stock market open. The futures did trade, however, but still, when the stock market's not open, you got very light liquidity, and markets tend to do not a whole lot. But you can still get whippy, sideways, choppy action, and that's essentially what you've gotten. So far, a London session has called a top. So far, it does look like that top wants to remain. So typically, I mean, technically, if you want to be short, what you would be watching would be the open of today's price, which is yesterday's close. Now, look at yesterday, how you closed. That is a close higher. You have been making higher highs, higher closes, except for on this day here, but every bit of the losses on this day was gained right back yesterday. So it looks more bullish to me. The fact that has the one and only thing that has me concerned is the fact that we liquidated last week's high and got that bearish reaction. So if I was bearish or looking for bearish continuation off of that, I would not want to see any kind of higher time frame like intraday time frame like hourlies or 4-hour candle closures above 24,844, as that is today's opening price. That is where I would expect sellers to step back up for continuation if you're going to see downside. So we would definitely like to see Bitcoin get above that. I do really like the fact that your point of control is down here, unless you're going to see a downside continuation move, as then by the end of the day or by the close today, if you do get that further downside push, then this will eventually or ultimately look like a sell side day. You have made the highest high since last week today and rejected. It's not a big rejection, but it is a rejection nonetheless. And you've basically been trading sideways down here around the low of day. So what I want to see is I want to see this break down on the DXY, and I would love to see the Dow Jones, NASDAQ, and S&P 500 all find support and start to head higher. But like I said, as long as there is negative news going on, it will be difficult for that to happen. We do have some data coming out at 10 o'clock. It is existing home sales. This will be considered bullish if you get a higher than expected number. The forecast is 4.10 mil. So if you get anything higher than that, like 4.11 or 4.2, then that would be a very, well, not very, but that would be looked at as a bullish data point for the dollar. We did have a nice bullish news item today for the euro as well. So the thing is when we got that news on the euro, I was in bed asleep, but you can see the euro did not take it as bullishness, right? So you're right on the day. You're struggling at the yearly opening range. That is where the sellers are. They are trying to keep it below there, because as long as you're below there, you're bearish on the year, you're bearish on the quarter, and you're bearish on the month, which means you're bearish. And you can see here in February, you are trading under the last month's open. Last month was Q1. It was January. Wait a minute. That is wrong. Give me 1 second here. No, it isn't. It's right. That's very odd. There it is. That's what it is. Yeah, that's more like it. All right, perfect. You can kind of see that's basically what's keeping resistance on the euro right now. So if the further and the longer it stays under and the further it drifts away from it will obviously change my bias on the euro. Same will be said for the dollar, guys. I trade the chart in front of me. I will not stay bullish if I have clear and obvious bearish signals. Now, where do we stand for the bearish trade, right? Because up in all of this year has been bullish. So what could make me become bearish again? I'm glad you asked. Let's go ahead and do this. All right, so every single asset except the DXY has liquidated Q4 2022's high. So you can see here Bitcoin did it in spectacular fashion. This is your quarterly chart. So there's Q4 2022. Liquidated that high. You've also liquidated Q3's high on Bitcoin. So essentially, as far as liquidity is concerned, the next area where I'd be looking for potential resistance would be 28,619 if you were to continue higher. But the fact that you have liquidated this move and you have rejected is an indication that there is no need for Bitcoin to go higher for liquidity concerns, right? Ethereum just liquidated Q4. Same scenario here. And then if we go look at the S&P 500, there's Q4 2022. You liquidated that. And the Dow Jones is the only one that has not. So the Dow Jones could still potentially have a very bullish target of 34,895, as that would be Q4's liquidation. On the NASDAQ, look where you are. You have liquidated Q4 2022 and you are moving lower. So as that's the only case that I could make for the bearish trade right now. Right now, I'm looking for support and I'm looking for longs, and I will continue to do so until the chart is obviously telling me that we are needing to be bearish. Right now, I'm not getting that. I'm not getting that signal. All right, so I'm still holding Bitcoin longs. I will hold those longs, but we do have accounts available to take opportunities for intraday. So currently what we're looking for is we're looking for a support test and a long trade. One could potentially set this up right here as your market is now currently open. You could take entry based solely on that supply or on that demand zone right there, as you have taken out the high of the breakdown candle. So we would need to see a pullback into this price right there, 24,633, and I would not want to see a deeper push into it. But that, of course, means your risk to reward is not going to be very fabulous. You would need price to get well above resistance in order just to justify a risk to reward of 2 to 1. All right. The better trade would have been here to take at support 24,574. Earlier in the morning, I did indeed take the trade on the liquidation of this morning's low. This was this morning's low. So as this wick right here pushed down, once it got back above, I entered the long position And right here, I took profits. I moved my stop to break even, and last hour, you smoked it. So, and I did that right there. That's when it took me out of the trade. As you can see now, it is starting to move higher. This ultimately would have been the profit target for that entry, as that is your next resistance. So now that it's 9:30 and the games have been played and you have liquidated and made a fresh daily low and are starting to trade away, this is the area to watch for potential entries. Whether you get it or not, I do not know. And if you do get a retest of this price and you do get long, I do not know if that trade will work out. So make sure you clearly understand how risk to reward works and that you know what you're risking. And please do not risk an amount of money that you are not concerned with losing. Because anytime you go into the market with risk, there is usually a higher probability that you are going to lose that money more than make money, especially in a volatile asset such as Bitcoin. But 24,637 is the entry point. And like I said, I would not want to see price get lower than that, as that would essentially wipe out this entire candle. That would not be good. So let's go back to Bitcoin's opening price. Remember, this is where the bears are. All right. The sellers are sitting there. So that's why you would have to have a bullish target of the last resistance. The sellers will be sitting there. That does not mean that price will stop there. And that does not mean that you will make money if you take a trade there. I can't justify a short entry on this asset because you are trading near the lows of the day. And your risk would be the high all the way up there. So literally getting an entry here for a short means you would need price to come all the way back down there in order to just justify taking the risk. We use risk to reward to justify trades. And right now, the only trade that can be justified would be a long position. And that position would be at support at 24,572. And if you get back down there, it's not going to look pretty. So let's see if this plays out. Oh yeah. Yeah. So you could literally justify a 2-to-1 risk to reward here by putting your risk under the support. All right. So you would need a push down to this in order to gain entry, which you did not get it. Not yet. There's the 5 minute. You can see you stopped clear in advance of that number and rolled over. That is the price you need to be tagged. Right there. And then this would be your risk. And that's just support. So, I mean, it looks like the trade is already taken off. But we are looking, like I said, I am ultimately bullish. I am looking for it to break out and continue because all of this looks like consolidation to me more than it does a bearish pattern. And that's essentially on all assets. So if we go back over to the big three, yeah, it's looking worse and worse because you haven't been able to do anything since you basically got up there, but weeks you've been trading up here, right? And you're still trading above your 21 on a weekly closing basis. As long as you're above the 21 on a weekly closing basis, then the trend is still currently up. And you are still currently finding support. And you did currently just liquidate the lowest week's low in since the last 3 weeks. 1, 2, 3 weeks. Last week you did that as well and got a small bounce. This is the beginning of the week. So, I mean, that's why we were looking for bullish entries. We look for the very first portion of the week, the first couple days to be the fake out move. It doesn't always play out that way, but you know, we have data that shows that it does more than 50% of the time. So it puts the probabilities on the side of the bulls when you start the week off weak, as price may finish higher on the week. So basically, Tuesday's like the best day to look for entries because you can essentially take a trade and nail the weekly low. So getting long upon the liquidation of last week's low could potentially be the low of the week come Friday. You can be trading up here. You see what I mean? But last week was an outside week and it closed bearish. So you do have a lot of people out there that are still very, very bearish. I posted this morning on Twitter. This guy right here, Mike Wilson, he is the CIO of Morgan Stanley. And he said, in quote, the bear market rally that began in October from reasonable prices and low expectations has morphed into a speculative frenzy based on a Fed pause/pivot that isn't coming. Dude, you are so freaking late. It's not even funny. The last several weeks on this asset have not been a speculative frenzy. If anything, it looks more like a bull flag consolidation. I guess he's talking about these couple weeks back here, but that was before the year even started. But on the year, you're barely trading above the yearly opening range. That is not a speculative frenzy. That is very much a sideways choppy market. So I don't understand why he's got that job. They're just late. They're always late, right? They are always late. They wait for price to do stuff and then they make calls on what they think may occur. I mean, it's what they do. But if you follow the news, if it's a down day, then the world is coming to an end, usually. And if it's an up day, can you believe this rally we're having? That type of stuff, right? That's all they do. It's simple. Anybody can do that. What we try to do is we try to position ourselves to take risks at specific areas for the opportunity, to capitalize on the opportunity. It does not appear that Bitcoin is going to come back down there. just yet. Just give it a second as the day just opened. And like I said, it is structured more to the downside than it is to the upside. So be very careful on this entry if you decide to take it. I would not risk a lot. Good afternoon, says Oldrope63. Good afternoon, my friend. Good morning, future legends, all of you. Seeing some bullish divergence on the 4-hour RSI on Bitcoin. If we close above the open in an hour, perhaps a retest won't happen unless we are due for a breakdown. Well, see, I don't really look at divergences unless they're happening on a big time frame, daily, weekly. Really don't even care about the daily divergences because, like, here's the thing, man. If you would have been trying to sell the dollar based on bearish divergence throughout the entirety of this bull market run here, you would have gotten slaughtered. Absolutely slaughtered. Like all of this right here, that's bearish div right there. Higher highs and higher lows, higher highs on price, lower highs on the indicator, right? Every time it made a bearish divergence, it literally got swallowed up. So I don't, here's another one, right? Look at this swing high here. That correlates to this candle. And then this swing high is clearly lower. That's one time where the divergence played out. As long as you took profits on the way down, you made money on that divergence call. But most of them on the daily, it is what it is. I have seen many times where, intraday divergences on the hourly and 4-hour charts have played out, right? I have seen it. I just don't have the probabilities of how often does it work versus how often does it not work. And that's what you need in order to even be looking at a 4-hour divergence. So what you need to do is you need to go back in time, find every single 4-hour divergence, every single one, and see what are the probabilities of that divergence working or not, right? That's what you would have to do. I don't trade that way, so I've never done it. I have no clue. But let's go see. Yeah, you do clearly have divergence there, but that's bearish divergence. But if you go on the closes, which what you have to go on, you don't have divergence from this peak to there, right? This indicator goes off of the closures. But from this close to this close is clearly higher. This close is clearly higher than that one. And down here, you are correct. There is bearish div there. But I can tell you right now, based on what has already occurred, that liquidation run above last week's high and that bearish reaction would have me more bearish than this divergence. You see what I'm saying? That's what's got me like very hesitant about the bullish move or about the bullish trade. The trade this morning was to wait for the fresh daily low, get long, take profits on the move up. It was just a bounce essentially coming off of this. That is a very weak looking 4-hour candle. just like that one was, but eventually and ultimately that candle was bought up. This was another one that looked weak, but this one did not liquidate that high. So this would have been looked at as a pullback buy opportunity. But since you have now done this, and since it's happened today, that is my main concern about looking for bullish trades today. And I've already told you where you need to look for bearish trades if you are bearish. You got an hourly res right here just under the open. So one could argue that anywhere from 24,804 to 24,840 could be entry points for bearish trades, and you would be targeting support. But like I said, doing that based on this alone would be okay, but what are you going to risk this against? You would need to at least get your risk above resistance, right? And then that would not justify a 2-to-1 risk to reward. And you are in an uptrend. You are clearly making higher highs and higher lows. You just made a fresh higher high today. So yes, you did get a bearish reaction, but at the same time, man, until that trend line is broken down, the one I showed you just a little bit ago, this pattern of an ascending wedge has not played out yet. Therefore, you do not have a bearish signal just yet. You are still fighting the overall main trend. The overall main trend is bullish. So I would not want to see any kind of price action occur under this point in this red. I would not want to see any drawdown at all upon this entry. And it did not give you an entry. Let's see if it would have on Bitget. Also, the fact that you closed under, I mean, you did make a trap, but your last closure was bearish. So if this goes up and you got 8 minutes left on this close, this thing could still close red. If that occurs, then you're going to have a bearish engulfing candle. Your last close was below support. We typically scratch the trade when that occurs, unless the next trade makes the breakdown a trap. And thus far it has. Right? You did take out the high, but remember, I like to take this kind of signal when it plays out on the daily time frame, not so much the hourly, because intraday volatility is crazy. And remember, at 10 o'clock, which is in 5 minutes, you have news coming up. existing home sales. This will affect the dollar. Right there, it will affect the dollar. You will get a spike one way or the other. If the number comes in higher, then that means this could be a very decent bearish entry on Bitcoin. If the number comes in lower, then the long entry hasn't happened yet. It hasn't given it to us. So we can't chase price. If you chase price, you are destroying your risk to reward. By destroying your risk to reward means that you're chasing price. And chasing price is not a very good way to make money in this industry. The setups need to be there and they need to be clean. And they are. We've taken so many that are so clean, so fresh and so clean, right? When they're nasty and dirty, that makes me not really like the setup. Some nasty, dirty setups have happened and they have ended up working out. But I like the fresh and so clean entries when, like, boom, you come down, you fill me, then you go out, and then you take me out. And then my P&L goes up, right? That's what we like. We got 4 minutes on the news. S&P looks bearish. You're making fresh daily lows on the Dow. NASDAQ, same thing. The bounce has been faded. The only one that has not been faded yet is Bitcoin. Could this be gearing up for a buying opportunity? Potentially. But it's a 50-50 shot. The news is either going to come in bullish or bearish. And the market's going to react to it, either bullish or bearish. So, I mean, I would call it less than a 50-50 shot because you have the news and then you have the market's reaction to the news. So you need a lower print in order for Bitcoin to go higher. And you need the market to take that lower print as bullish. And I mean, they got it listed as a 3-star, which means it's a high volatility move or a high impact news event. But I've literally seen this thing not even, markets not even react off of it at all. Like, if you didn't know about it, you would never have known about it. So I don't have a limit setting here. I'll watch it, and if I like what I see, I'll mark it in. But I'm definitely not going to just throw a limit buy here and a limit sell there in anticipation of getting filled and then running up to my profit target. Just simply because of this. That's important, man. The market is always in search of liquidity. And it has found it. That is all it needed right there. So if the market's intentions are to move up, if there's more demand in the marketplace than there is supply, it will move up in the search for supply. But we don't know. According to Glassnode and the data that we have there isn't much accumulation happening up here at these prices. So if anything, it could be looked at as distribution, not accumulation. but you're just not getting that bearish reaction either that you would expect in a bear market rally. And you've had weeks to do it. Weeks. All right, so we got the news, got really nothing out of it here. Yeah, DXY literally hasn't moved at all. I don't have the number. There it is. Came in lower, so that should be bullish for Bitcoin. Should be a bearish reaction on the dollar. You're not getting a bearish reaction on the dollar. Let's keep it on Bitcoin and see if we get a tag of this level here. And that's all we want. We just want a tag of it, and then we want to instantly see price move away from the level. Instantly. We do not want to see it just trade for 20 minutes under the level. That's not good. That means more than likely we're not going to see what we want to see. And this has migrated lower, which is more suited for a bullish move, but that doesn't always work out either. That could just mean that the bears have migrated lower. This is your daily res. So a non-event at all on the existing home sales. Non-event. Yeah, can we look at stocks? Yeah, we'll look at stocks here in a minute. We're going to try to wrap the stream around 10:30. But we're looking to see if Bitcoin will come down here and give us an entry. And we're determining if we're even going to take that entry based solely on what price does when it gets there. It's going to be one of those types of taking the market order in, make sure you're using very low leverage. That way you're not getting crushed in fees. Because just by taking the entry is going to put you in the red because of fees. The higher the leverage, the higher the fees. Watching these numbers right here, looks like you're getting lower push. Fresh daily low there just occurred on the US 100, that is the NASDAQ. Fresh daily low just occurred there on the Dow. And fresh daily low right there on the S&P 500. So I think more than likely I am not going to take a long on Bitcoin, as you are probably going to see a fresh daily low. But this is very choppy. That is not trendy. And it has been doing this for a long freaking time. Since last night, you've been sideways on the dollar. There is a daily support right there. So one could still justify long entry there. You're very much under that. Coming into the yearly open, I mean, that's a buyable event as well, as long as, like I said, you get the reaction you want to see, and you don't just slice through it with something like this, as that would not look good. You do have weekly support there on the euro. The pound had a fantastic day today. The pound at the London session open had a push down to daily support and then an immediate bullish reaction. This is the stuff I'm talking about right here. This is the stuff made of dreams. And look how fresh and clean that was. So when I say so fresh and so clean, that's what I mean. 1 5-minute candle push down into daily support, the exact level that I would be looking at to be a buyer. And then look at the reaction. You're still getting a bullish reaction on the pound. The pound is back above yearly open. So that looks good. If it can continue and get a close above supply today on the pound, that's going to look very good for bullish opportunities on pound dollar. I know that is not consensus across the FX YouTube world. It's actually the exact opposite as most of your FX traders on YouTube. Most of the time, you'll find me on the opposite side of those guys. But like I said, it also depends on the close. This thing closing back under this right here, because this would be a selling opportunity simply based on the fact that you did close below support here. And you got two very big levels real close to one another. Now, all in all, Bitcoin is not down very big today at all. I mean, the reason why I took the long was based off of the 3-day open. The last 3-day session we had was there. You can see how that ends up becoming really close to that hourly support. And remember, this was the daily low. So it was just a liquidation run. Boom. Make a fresh daily low and then go up. We're just not seeing anything else happen. The XY back down. This Bitcoin needs to come down and give us that entry. Before that happens, preferably. Come on, baby. Just give us a quick spike down to 24,637, please. Let's go this way. Right here. Also, at the same time, I'm watching this. I am watching this. Because if this starts to jump back up to 17, 18, 19, 20, then that means it's going back up. We're getting pretty late in the day as well. I do not typically like to take entries this late in the day. And I definitely don't like the fact that all of these now are more than 1% down. That's telling me, without even looking at the chart, that they are not finding support. They may later on find support, but as of right now, they're still moving lower and making fresh lows. The dollar right back up. How do we act? How are we going to act? Here it comes. There's your tag. So now what you want to see is an instant reversal move away from it. Not that. That's pushing all the way back down to support. Damn near it. So if the trap would hold, then 24,574 would be the support. But like I said, if this was going to be bullish, a tag of that level would all that would be required. Every one of these things are still moving lower. These things are literally in free fall. You literally have the Dow Jones trading under the yearly opening range. That is not bullish. So yeah, I don't like it. Excuse me. The dollar came right back down. So everything else trading on its own merit. And it's probably based on that China-Russia news, right? The U.S. is very concerned that China is going to help Russia in the That's not good news, regardless of what's going on in the economy. So Bitcoin back to being red on the day. Well, you never did get bullish on the day once you got under the open, and you're back under support. See? So that would be a failed trap on the hourly. And it did not give bears an entry either. You would have needed a retest of the daily open. That was very close. No cigar. Very close. But no cigar. So Bitcoin, like I said, probably going to be looking for new lows. Would I be a buyer down here at fresh daily lows? Absolutely not. Not with this up here. With this up here, this is concerning. I typically would have been the one to short that if I had a bearish bias. That would have been a short entry if we had a bearish bias going into today. But we just don't. S&P Global Composite, BMI 50 versus 47.5. Yeah, but that's not high impact news. It could be why the market's coming off, but more than likely, I would have to say that it's based broadly more about that other stuff, because that's what Bloomberg, everybody's talking about today. Nobody's really talking about inflation and all that stuff. They're directly talking about the China and Russia stuff. So that's where basically everybody's got their minds right now. But like I said, at the same time, it's a buying opportunity if you're bullish the market to buy a yearly open test, right? I don't like how long you consolidated up there without going anywhere, but it still is a buying opportunity. You don't have to do it right now, obviously. Find out where today closes and then mark that as support, and then see if you get any retests of that price in the next day. If you do, then you can look to take the buying opportunity. But if you're in the camp of this is a bear market rally, then finally you're getting at least some indication that you may be correct. But you're still within like I said, you're still structured very bullish on this asset. You will be until you lose this on a closing basis. You got a ways to go before that happens on the S&P 500 and the NASDAQ. So it may look bad today, but this is also still the beginning of the week, guys. Ultimately, this could still end up finding a low somewhere and going right back to the upside. So Dow is the only one that looks structured bearish, or not bearish, but the one that's losing its bullish momentum. Because if you remember on the daily, this looked really good. Now it's not looking as good. because you're coming all the way into the yearly opening range. But it's a good place to mark risk. You got a clear swing low down here for a swing trading opportunity, a longer term hold, if you will. And since you're looking for investment opportunities, this would not be levered up. You would not be levering this trade up. You would just simply be buying shares of the Dow with a hard stop under your 200 moving average. It's not a bad risk to reward, because ultimately, if it does become bullish and we ultimately do get better news moving forward and inflation does continue to trend lower into 2024, then you're going to be trading much higher. If it is a bear market rally, this is the longest time in the history of bear market rallies to form a top that I've ever seen. Like, typically in a bear market rally, your fake out lasts a couple weeks at best. At best. This one lasted a few weeks before boom. This one's been going on for a long time. This is still structured bullish. And we still be looking for bullish entries on Bitcoin. Just not today. You got the weekly open down there on Bitcoin. Naturally, it's going to look bad for a retest of it since it just happened yesterday, but at the same time, it's also support. So we'll just have to see how the rest of the day shakes out. But there's no clear entry off any really good levels. I guess one could argue that. But you would have to almost wait 2 days and 9 hours just to see if this level holds before you could even take an entry based on that. So Bitcoin may be looking for a deeper correction. It hasn't went anywhere still. You're just down 1% on the day. 1.4% on the day. That is not a high volatile day for Bitcoin, to say the least. I mean, we see 2 and 3% every single day almost on Ethereum. But this could just be the half of the day. It could continue lower all day long and end up somewhere down in here, and somewhere around the 3% area. Where would that put you from high to low? Let's not go high to low. We got to go from the open. A 3% move would put you roughly around 24,074. So a close under support. And you're still structured good. I mean, it looks good. Just got to find support. Solid case for the bearish div, but I was suggesting potential bullish divergence from the current lows. Oh, what, like hidden bullish divergence? Yeah, I mean, like I said, I don't really pay too much attention to divergences. Anything under dailies, I like the weekly ones the best. I think weekly divergences play out better. I don't make trades based off of divergence anyways. The reason I was a Bitcoin bull was simple. Every time Bitcoin has been oversold on a weekly basis, that's when you've wanted to be a buyer forever, right? In Bitcoin's entire history. If you go back all the way and look at every time you were in oversold regions on Bitcoin, being a buyer at and around those prices wasn't such a bad plan later on in the future. Same goes for this, right? There you are, oversold. Oversold was at $3,000. Being a buyer at $3,000, especially when this thing was trading at $59,000, not a bad buy, right? And this time, we had gotten more oversold than we ever have before. So, of course, that's going to put me into a bullish bias. Of course it is. And that's massive div right there. Boom, boom. Close, 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 close. And there's your reaction from it. So that has played out. Like I said, it just going off of liquidations, Bitcoin does not need to go any higher. It has accomplished its liquidation. The next quarterly liquidation would have to be all the way back up to 47K. And yes, I am bullish on Bitcoin, but for what we have for the rest of the year, I do not see 47K as a price target for Bitcoin for 2023 at all. No, at all. But there are monthly candles in there that it could look for that are lower. You got 31,931 there. And then that could mark the yearly range. Boom, boom. Seven days left on the February candle. It is a little bit of a shortened month, but it's only a couple days shorter. But you can clearly see that bullish momentum has ran out. Look at the size of this bullish candle versus the size of this one. And look where you're currently trading. You know what I mean? So as far as any more topside, there's no need for it for liquidation. Liquidation, next spot, 21,392. And then we go from there. That's the potential range for next month. Right there. Depending on where you close and how you act the first week of next month's candle will determine which one of these areas I aim for. That's a good looking 2-week candle, man. 5 days left on that close. I mean, I can go across the board on all time frames. This thing still looks good. It's just losing momentum, which is normal. Absolutely normal after a run like that. So let it pull back. Let it find support. Hell, you're still trading off the daily 21. A pretty good piece. Let it find support, and then we'll be buyers. That is, of course, as long as the DXY falls back down. The DXY has to fall back down for me to be heavily bullish. And it is falling back down. That looks good. Let's see if this is like the ultimate buying opportunity moving forward. You're down. Get rid of those moving averages when looking at the intraday charts. It's a decent pullback on the NASDAQ. You took out that swing low, which is what you wanted to do. Took it out again here. You only need to do it once, but to do it twice is just, let's get those early bulls that can't be patient enough to wait. You're gonna need some really good news to come out. Ethereum's still trading sideways. Hasn't liquidated anything to the downside. Hasn't liquidated anything to the upside in a while either. Losing support pretty good. You see how this one tested that old resistance level and found support to perfection. I was short before the news got a nice TP hit because of it. Nice. Awesome. We shorting now? No, we don't. No. No, we're still bullish. We're just, waiting for support. You don't want to short the lows, my friend. Never. You don't necessarily want to buy the highs either. And you are at the highs on Bitcoin. It's just one of those things of looking for a breakout to happen. Based solely on retail looking for this to break down. Because of patterns. Even though people do not make money on patterns, they still continue to point them out. Why do divergences matter? Does it signify buyers or sellers are getting exhausted or something? It doesn't really. Like I said, the only time that I will point it out is when it's on the higher time frame levels, and it's a liquidation run, is what it is. That's all it is. All right, it's a liquidation event, your final capitulation, if you will, when it takes place on a higher time frame. So liquidated this swing low down here on the FTX dump, right? But you'd be surprised how many people was buying this, and then how many people bought right there, right? Then people bought the low on the dump. Now that's a whole week of dumping, but we know that it really only lasted a couple days. 2 days shows you the capitulation event. There's the candle. That's what a capitulation candle looks like. Right there, big hammer candle. That's what everybody's looking for. So people that buy this end up getting liquidated. So there's the low. Look what happens shortly after you liquidated it. You did not need to go any lower than that low right there. Why? Well, because the next liquidation point on a weekly closing base or on a weekly basis was all the way down here. So this wick low liquidated this week, that week, all them weeks. So this would be the next point. So once you take this one out, if the market closes under, significantly under, then we can bearishly target the next one down for intraday trades. But when you just barely take it out and then instantly reverse, that's all it's doing. So this shows you that the sell side's exhausted, especially when you make a run above the next liquidation point to the upside, which would have been there. Because shorts will bring their stops down, right? That's why every swing high and every swing low is a target for us. We don't treat them as supports or resistance. We are either short and we're taking profits once the liquidation occurs, or we're waiting for the liquidation to occur to get on the same side as the big boys, looking for the next liquidation. So you can see how that translates to exhaustion, sell side exhaustion. The other name for, or the other word for sell side exhaustion is capitulation. This would have been the next swing high to liquidate. You got it there. Boom. So if the market at this point wants to roll over and look for more supply, this would be the target. Notice how you don't even come close to getting there. Once you got above this swing high there, that's when the short squeeze started. And the short squeeze, this is a repricing event, letting you know for sure that this was the capitulation, because above this wick, where is the next liquidation point? Here. That's where the market was aiming for. Look at this candle. Look. Boom. Stop. Close. You see what I'm talking about? Like, that was the target. The sellers were exhausted here. There was no more supply. So when the market runs out of supply, it needs that imbalance of supply and demand, or it needs to be balanced in order to stay in a range-bound scenario. When you get heavily one side or the other, that's when the market will turn around and go in search for the next areas of liquidity. So then you just follow the wicks up. Next week, what happens? Boom, got that one and this one all in 1 week. Boom, boom. Look where it stops after it liquidates this one. You get above the liquidation and you stop. You close under it. So now you're either looking for this or this on this week's open. You push down, up, close above. All right, that tells us where is the next liquidation bound to happen. There. And we got it barely here, right there. So the next area to liquidate is here. So now we have a very wide range, right? But guess what? We can start to aim for lower lows now if the market is exhausted. And since you just liquidated that and got that bearish reaction today, we just have to see how the rest of the week goes. If the week closes out bearishly, then our next area of potential support would be here for bullish continuation, but this would not be the target. This would be. Ultimately, or that, right? Because now that's where anybody that gets long from down here, they're trailing their stops up under swing lows. That's why retail is continuously being stopped out, because they're either A, breakout traders, they're waiting for fresh highs and fresh lows to get hot, long or short. But the main reason is from protective stops. People trailing stops. Where are you taught as a retail trader to trail your stops? Above or below swing highs and swing lows, dependent on your directional bias, dependent on your position. So if you're long, you're going to trail your stops up each and every time you get a higher week, because you're trying to protect your unrealized P&L. That's why you get back up. That's why the market moves the way it does. It's just constantly in search of liquidity. And it's doing this on the smaller time frames. It's not necessarily doing it only on the weekly. That's why it's ultimately important to understand where all of them are. Right? Look at this. Q4, Q3, Q2. Where has Bitcoin stopped going higher? Where has it exhausted? Right there. It's funny how it exhausted there. Now, this is on a 3-month time frame. You got 1 month and 11 days left before this thing closes. Depending on where it closes will determine potentially what it's looking for next. A close above, and a very strong close above, could indicate that the sell side's exhausted all the way up to there, but it's highly doubtful. So that's when you will go back down into your smaller time frames to find those liquidation zones. I mean, all the way down to the daily, man. All the way down to the hourly. We've watched hourly liquidations take place, and that be good enough. So when you're looking for a liquidation target, like, all right, so with the market that you have right now, there are your key areas of liquidation. This just took place today. So if the market finds support here and continues to run higher without running these lows, then it found all the demand it needed. So it goes in search for supply. Supply is always above. Demand is always below. This is the price. And this is what people are taking positions on. You don't really want to look at this in terms of like a heartbeat monitor, so to speak. It's just a price oscillates back and forth, back and forth, back and forth. You can literally see it stop people out. Like, here would have been the liquidation over here, right? Sets in a swing high, comes down, sets in a swing low. Then it trades sideways inside of it until this boom happens. Then what? The market reprices all the way down and then boom, gets this. So now this becomes your liquidation point to the downside. There's your liquidation point to the upside. Here comes the market. Boom. There. If we keep getting further downside continuation, then we know the market is targeting liquidation points. This is the next one to the downside, then this one. So when I'm taking positions, I am basing it off of objective levels and trying to stay with the trend, obviously, because once the market starts trending, then that means there is a significant imbalance between something, right? If the market is trending to the upside, then that means there's a significant imbalance of demand, and the market will continuously go higher and higher and higher until it finds a significant amount of supply. That's how prices equalize. If there's a ton of demand for a product, that product's price goes up. If there is no demand for a product, then it goes on sale, so to speak. Then price runs lower. It'll go cheaper and cheaper and cheaper until it finds equilibrium. Once it finds equilibrium, then it'll trade around those prices. But the market is constantly in search of liquidity, and you are the liquidity, unfortunately. You, me, hedge funds, banks, everybody. Anybody that participates in the market has liquidity in the market. And the market will make a run for that. Always, constantly. Taking out swing highs and swing lows along the way. This is why we watch them. And this is why the ranges will start to get wider and wider or narrower and narrower, because as more demand picks up, you'll see that in the higher swing lows, and the market continuously liquidating the swing highs until ultimately you get a repricing to the next significant area of supply, or vice versa. When a ton of supply comes into the market, then you get an imbalance of supply. This is what happens. But the market is very good. Very, very good at liquidating old swing highs and swing lows before then going in search of the next area. Swing low, swing low, swing low, swing low, swing low. So what you typically would call a double bottom, those are beautiful places to look for profit targets eventually, if the market starts to trend lower. That's the crucial thing. We try to look for order flow. We're trying to figure out which way is order flow going. When you get stuff like this, it's difficult for anybody. This is a balance right here. This is when the market is chopping sideways. You have a balance. The market likes where it's at. There must have been a significant amount of supply right here. Because the market ran straight to it. Right? Straight to it. And then dumped. And that was well above these swings here. So anybody that got short on any one of these days, they got stopped out. That generated a ton of buying. So one automatically assumes, well, if they're getting stopped out and that's bringing in a ton of buying, then why does ultimately the market roll back over? Ain't buying demand? It is, but you have who dumping into it, right? FTX. They were dumping into all the buying that was being triggered. Boom, 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 until it runs into a significant amount to the point to where it's dunzos. And then you get repricing. Big candles. That's the Luna dump. Here. Big repricing. I mean, it's difficult, but that's why you're constantly being stopped out. But that's all you got to go with. There's no other way of doing this. You can't go into the market without a stop unless you're only buying spot and you're only doing it as an investment and you're only doing it with an amount of money that you don't care to lose. That's the only way you're safe in this. And then you're not safe, but you're not losing massive amounts of money like you do when you're levered up. That's why, like, basically, when I was saying that anywhere inside of this green zone here, anywhere at any price from once we got to it, you could have been a buyer. Anywhere inside of here. Because historically, this has been where you wanted to be a buyer in Bitcoin's entire history. Historically, this is where value is. And since you know the volatility in the asset, you come in here with spot. You don't do it with risk and leverage. You do it with spot. That way, when you do get, 10 or 15% drops in price in the span of 2 days, yeah, it's going to hurt, especially the more money you have. Like a 15% loss on $100 million is quite a bit of money, right? Whereas a 15% loss on $100 is $15. You see what I'm saying? But it's still not nearly as bad as it would be if you take that $1 million and apply 20x leverage to it, because that 15% drop now becomes 15 times 20, and that's the percent drop. But anywhere inside of there, you could have been a buyer with spot as an investment. And that investment would be up 40% right now. Even with the near-term pullbacks and corrections we've seen from the lows. Bitcoin is up. Even if you would have bought here, because this is when we first got to that green zone, Bitcoin is up 40%. 40% on any amount of money is a fantastic return. Fantastic return. But if you're going to use leverage, if you're going to be a trader, you got to use stops. And the only way to do it is by using swing lows and swing highs. Because that's where the market runs to. You can put it slightly above or slightly below. You just have to be the one that ultimately manages that risk. Because you know as well as I do that sometimes it don't need much. You don't need to be very much above that swing high. Like that's a weekly swing high. A weekly. You don't want to trail that stop right to that swing high. You trail it close to it, but not right to it. And if you're just on the wrong side of the market, then you're going to see continuation. And that's why I said the liquidation break strategy doesn't work in a trending market, because the market is trending. That means there is a significantly more demand in the market. So if you're trying to sell into every single swing high because you think that's going to be a liquidation break where price trades up, liquidates, and then rolls over, you're going to get killed. Typically, this occurs in high volatile situations, right? High volatile news events. That's the only time you want to deploy that strategy. When you're in a normal market condition right now, which is trending still, you are in a trending market until you take out that 21 on a weekly closing basis. This is trending. This is a breakout. This is a retest. This is a continuation push. So it tells us that at least from down here, there is a significant amount of demand down there. But that can change. If a significant amount of supply comes into the market at these prices, meaning a bunch of big sellers just for whatever reason start to sell, that will cause an imbalance and a repricing. Markets are not operating based off of what happened back here. It doesn't matter. They're operating based on what's happening now, right? Over time, it's a weighing machine. In the near term, it's a voting machine. I'm sure you've heard that, right? The marketplace in the near term, it's noise. In the long term, it tends to be a weighing machine. Well, long term, Bitcoin is a very good asset to be a buyer of, but only when it is undervalued. And that's historical data. Undervalued, the orange line. That's when you wanted to be a buyer. That puts you as a buyer in the bear market lows, which was a good place to be a buyer. Same here. Undervalued happened at the bear market lows. Same here. Undervalued happened at the bear market lows. That's why when we got in here on June the 9th, we changed our bias from bearish to bullish because you are now undervalued. Now demand will start to come back into the asset, and it takes time for that demand to build up. We have other asset or other indicators and stuff that we can look at, but the problem is with exchanges and everything going on, there was a ton of accumulation that was happening on the lows down there. Not a lot of accumulation happening up here where we are now. So take that for what you will. Does that mean the market's going to drop back down to here? No, it doesn't. But at the same time, I would like to see it start to fire up again. At least show me that there are people interested in the asset. This data is also very difficult to explain because why did you get a bunch of accumulation up here and the market just rolled over, right? You should have had more distribution going on up here instead of accumulation. But according to this metric, you had more accumulation happening than distribution. So, I mean, they're just indicators. Just take it as such. Don't take it as like the Bible and the gospel, and just take it as such. Make your trading easier. As long as you're trending above this weekly 21, you want to look for buying opportunities. You know where those opportunities are. They're at support. You also know that it takes time, and occasionally you're going to get stop runs and all kinds of games get played. That's what's going on with the dollar right now. This is why I am still a seller on the dollar. I am not a buyer on the dollar because I can clearly see there is a downtrend on the dollar, and pops in price usually get sold into in a trending environment. This is a clear and obvious trending environment. This is not a trending environment, right? This is not a trending environment. But this is, right? That's what we got here so far. So if you start closing weeklies back above, you have to be careful, because you can either be going into a period of a lot of consolidation, and that moving average will get you killed if you're taking entries based off of it. But we can use them to guide our hands a little bit, put us on the right side of the market. As long as you're trading above the 21, you have the potential. And slope means a lot too. Slope on this means a lot too. Right? Just because you broke out here doesn't mean you want to switch your bias to bullish just yet. You need an upward slope, you need a retest, and then you need a bounce and an impulse to complete the trend. You didn't get that here. You broke right back down below it. Then you broke right back out above it. It wasn't until you started retesting it and finding support and then getting expansions off of those support tests that you could say you are in a trending environment. It takes time, lots and lots of time. The dollar has been stalling out at resistance now for 3 weeks. This is week number 3. That is objective resistance. You also have the 21 exponential moving average right there. As long as you are under this and this, anything up in between is a selling opportunity. There will be games played, and I wouldn't doubt it for 1 second if before you ultimately do make that dive back, under the yearly opening range, that you don't take this wick out first. So moving forward, for me especially, 104.667 will be a huge price to look at potentially being a seller. I will be a seller here. That is, of course, if I get that little peekaboo above and that immediate fade, then I will get in on a short position by getting long the Euro USD. That's all I'm waiting for. The Euro USD has a lot much further to go in order to grab that wick. So right now, you can try to take buying opportunities here. If you think that this is going to be a longer term uptrend on the euro, if you think that you're going to get back to 2022 yearly open prices at $1.13, then you could take a trade right there and put a stop all the way under this wick and justify a 2-to-1 risk to reward. But you're going to be sitting in that trade for 2 years probably because, yeah, it's just the way markets work. But these 3 prices are the only 3 prices I care about right now. And I am looking to be a buyer. If it stops there, closes above, then I'll look to be a buyer. Weekly support intraday. I will try to time it intraday as a day trade so I can lever it up. That way I can let it run risk-free. That's the best way to do it. Take your profits on a day trade, get your risk out of the market, and then let your unrealized P&L run with the trend. That's how I've done it with the USDJPY. That's how I did it with the pound yen when I caught the pound yen trade. That's how I'm going to do it with the Euro USD long. That's how you do it, man. I'm short this asset on this wick. I took it based off of DXY weekly liquidation trade. Now we're above it. So now it's starting to get to the point to where I'm starting to get a little bit concerned about it. But guess what we're doing right now? Today, in fact. Why didn't you tell me that, Wes? Why didn't you tell me that there was a selling opportunity on the USDJPY today? 2 hours ago. Right? If this is a liquidation event, if this is going back under the 21, and if this clear and obvious downtrend is going to continue, that was your selling opportunity to happen on that asset. It still could be taken based on a swing trade. You are looking for shorts as close to 135, 105 as possible. Throw your stops up there. And hopefully this was a stop run on that weekly. And hopefully now the trend will resume back in its normal manner. You will know you're wrong if you get stopped out. And that is trading. Nobody knows what price is going to do. Not me, not nobody. We just use indicators and the knowledge that we have to help us make correct decisions. You are above the 21 on a weekly basis, but you've not closed above it yet. And you just made a run above that high. And that high just liquidated that high. So that means the next high for the USD JPY to attack is all the way up there. So if we get up in here, then yeah, I'm going to start to close my trade out. Because now you have something that could be considered a trend change. From a downtrend back to an uptrend. But being that you've been going straight up for 1, 2, 3, 4, 5, and now week number 6, I would say this is the move right there. I would say a man could throw a short on USDJPY right now. And there's a Heath level to back it up. Right there. So entry would be there. Stop above that. All you need is down here. Then you can take 2/3 of your profit off, move your stop to break even. And if you continue to trend lower and away from that price, you will be setting in a risk-free trade that could eventually end up becoming a nice trending move that ends up in the future looking something like this. If I can find the right damn tool. Huh. Wouldn't that be nice to look back 7, 8, maybe 10 weeks from now and say, I sold 135, 105 because I watched Trade Talk and that trade has been paying me dividends, baby. You guys have a fantastic day. Make sure you guys trade safe. Make sure you trade smart. And as always, have a fantastic day and happy trading, everybody. I got a doctor's appointment, so I got to go. Love y'all. Thank y'all for being here. As always, thank you so much for your time. If you do have an important question, please just drop it down in the questions below. I will answer it as soon as I get back from the doctor's appointment. Thank you guys so much. Have a fantastic rest of your day.